Welcome to Explain the Charts, your go-to channel for in-depth market analysis. Today, July 30th, 2025, we're putting one of the semiconductor giants, Intel Corporation, under the microscope. We'll start by breaking down the most recent news and current events surrounding Intel, then dive deep into its price charts to understand what's truly driving its movements. Recent headlines for Intel have been a mix of strategic pivots and investor apprehension, creating a complex narrative for the stock. New CEO Lip-Bu Tan is aggressively shedding non-core assets, including plans to spin off its network and edge group, a move that follows the sale of a 51% stake in the Altera programmable chips unit back in April 2025. These bold restructuring efforts are part of a broader cost-cutting initiative, already resulting in layoffs and the cancellation of projects in Germany and Poland, all aimed at fostering greater fiscal discipline. Interestingly, while Intel recently reported strong Q2 2025 financial results, actually beating revenue expectations, shares tumbled nearly 9% on Friday following the earnings call. This paradoxical market reaction underscores deep-seated concerns among investors about a potentially lengthy recovery and Intel's ability to truly turn around its struggling business. The CEO's stated philosophy, "I do not subscribe to the belief that if you build it, they will come," suggests a more cautious growth outlook, which has certainly contributed to the investor gloom. Furthermore, recent speculation regarding the future of Intel's crucial 18A process for external customers, despite the company's clarification, added another layer of uncertainty. Intel confirmed its plans to launch 18A-based Panther Lake chips in the latter half of 2025, yet the market remained wary, contributing to what analysts describe as a noisy tape for the stock, full of conflicting signals. The competitive landscape is also a factor, with AMD's recent product debuts putting additional pressure on Intel's market position. Now let's translate these news events into the language of the charts, beginning with a comprehensive look at the daily view of Intel. From its peak around $43 in March 2024, Intel has been locked in a persistent downtrend, characterized by a clear sequence of lower highs and lower lows, signifying a prevailing bearish sentiment over the past year. One of the most critical price points that has emerged is the year-to-date low of $17.66, precisely touched on April 8, 2025. This level has proven to be a robust support zone, prompting a significant rebound, as corroborated by external financial analysis. The overall trading volume on the daily chart has been highly volatile, with distinct spikes often coinciding with sharp price declines, clearly indicating aggressive selling pressure triggered by adverse news or broader market shifts. For instance, the drastic gap down and subsequent drop on August 2, 2024, where the price plummeted from approximately $29 to $21.48, was driven by exceptionally high volume, marking a definitive shift in market perception. Another vivid example is the substantial decline witnessed on July 25, 2025, where the stock dropped from about $22.63 to $20.70, directly reflecting the negative market reaction to the Q2 2025 earnings call, even if the headline numbers were perceived as a beat. Throughout May and June 2025, the stock repeatedly faced strong resistance around the $23.86 level, failing to sustain any significant breakout above it, which underscores the bearish sentiment at those price points. Looking further up, the $25.26 level acts as an even stronger resistance, requiring considerable buying conviction to overcome. Let's pinpoint a fascinating period on the daily chart, focusing on the specific range from April 4, 2025 to April 11, 2025, to illustrate a key price dynamic. During this critical week, you can clearly observe the stock plunging aggressively from $22.43, eventually hitting the $18.13 low on April 8, just slightly above that crucial $17.66 year-to-date support level. What followed was a dramatic, almost V-shaped reversal. Intel roared back, surging over 19% on April 9 to close at $21.53, demonstrating an immediate and strong demand influx at the low. This rapid recovery strongly validates $17.66 as a significant support floor, indicating that a substantial number of buyers were waiting to enter at those discounted prices. However, it's crucial to note that despite the impressive bounce, the rally proved unsustainable, with the stock quickly retreating and falling back below $20 within just a few trading sessions, confirming the underlying bearish pressure. Shifting our view to the 1-hour chart, we gain a more granular perspective on the intense volatility experienced in mid-July, specifically from July 9th to July 17th, 2025. This detailed timeframe clearly highlights the sustained downward pressure that Intel has encountered, manifesting as a consistent pattern of lower highs and lower lows. Each attempt by the stock to stage a rally or hold higher ground was met with immediate selling, demonstrating a strong supply overhead and a lack of consistent buying follow-through. Notice how Intel repeatedly struggled to maintain price levels above $23.50, signaling that this price point serves as a near-term resistance on shorter timeframes. The hourly chart reveals intermittent periods of consolidation, but critically, these sideways movements were frequently followed by renewed declines, strongly suggesting an absence of robust bullish conviction in the immediate term. For the most immediate and up-to-date price action, let's now transition to the 15-minute chart, specifically tracking the period from July 25th right up to July 29th, 2025. This highly detailed chart vividly illustrates the precipitous decline that has brought Intel to its current trading level of $20.41. On July 25th, the day of the Q2 earnings release, we observe a dramatic intraday price drop. The stock fell sharply from approximately $22.63, eventually closing around $20.70, which directly correlates with the nearly 9% tumble highlighted in financial news reports. Despite a few fleeting intraday bounces, the overarching trend observed over these past few trading days has been unmistakably bearish, indicating persistent selling pressure. Most recently, on July 29th, the chart shows another significant downward movement, with the price declining from roughly $20.74 to its current close of $20.41, precisely aligning with the reported 1.35% decrease in the last 24 hours. This current price of $20.41 places Intel precariously close to its historical lows witnessed in late 2024 and early 2025, making it a critical juncture for the stock. The substantial volume accompanying these declines on the 15-minute chart consistently reinforces the narrative of strong and sustained selling interest at these levels. So, after this deep dive, what does the technical and fundamental landscape suggest for Intel? Let's carefully weigh the reasons to be bullish or bearish, both short-term and long-term. In the short term, the bearish argument appears compelling. Intel is embroiled in a significant long-term downtrend, punctuated by recent large price drops executed on considerable volume, which signals strong institutional selling pressure. The ongoing strategic uncertainty stemming from the CEO's aggressive asset-shedding strategy and cost-cutting measures, while potentially beneficial long-term, creates near-term instability and investor doubt. The market's lukewarm, if not outright negative, reaction to the recent Q2 earnings, despite some positive headlines, indicates a fundamental skepticism about Intel's immediate growth prospects and its capacity to rapidly innovate against fierce competition like AMD. Analysts widely anticipate a prolonged recovery period, further dampening any nascent short-term bullish sentiment, making it a challenging environment for immediate upside. For short-term traders, the prudent strategy might involve looking for further downside, potentially targeting a retest of the $19 to $20 range, or even the critical $17.66 support level if the bearish momentum intensifies. Trading on confirmation is key. Observe whether these support levels hold with strong buying conviction, or if they break on heavy selling volume, signaling further declines. Conversely, the bullish case, particularly for long-term investors, hinges on the belief that Intel is significantly undervalued at its current depressed levels, especially given its foundational role in the tech ecosystem. The $17.66 mark has historically proven to be a robust floor, implying that any retest of this level could trigger another strong buying response, provided it's backed by renewed investor confidence and substantial volume. Optimistic long-term investors might view the CEO's rigorous cost-cutting and strategic restructuring as essential foundational work, eventually paving the way for improved profitability and a more agile competitive stance. However, for a genuine bullish reversal to take hold, Intel would need to decisively break through and sustain levels above key resistances at $23.86 and then $25.26, which have proven to be formidable barriers in previous rallies. A failure to reclaim these levels would confirm the strength of the overhead supply and continue the bearish pattern. Always remember to manage your risk and consider broader market sentiment, as tech stocks are often influenced by sector-wide movements. To recap our in-depth analysis for Intel, currently trading at $20.41, the stock is clearly battling a pervasive long-term downtrend. The most immediate and psychological support level to monitor is the $20 mark, with stronger and historically significant support residing at the year-to-date low of $17.66. Our unbiased prediction suggests a moderate likelihood, around 60%, for a sustained retest or even a slight breach of the $17.66 support if the prevailing negative news continues or if the broader tech market turns south. Conversely, on the upside, key resistance levels stand at $23.86, a level the stock has repeatedly failed to breach, followed by the more substantial barrier at $25.26. For a sustainable bullish reversal to manifest, we would need to witness a clear and decisive breakout above $23.86, ideally supported by a significant surge in buying volume, which we estimate has a lower likelihood of about 30% in the immediate short term without fresh, impactful positive catalysts. Conditions that would dramatically reinforce a bullish scenario include concrete evidence of the CEO's strategic pivots yielding substantial competitive advantages, groundbreaking developments in new chip architectures, or a strong and sustained rally across the entire technology sector. Conversely, further negative news regarding product delays, intensified price wars, or continued erosion of market share to formidable competitors like NVIDIA and AMD would undoubtedly exacerbate the bearish outlook. As we move forward, diligently monitor Intel's next quarterly earnings report, any further pronouncements from CEO Lip-Bu Tan regarding strategic foundry plans, and the overall performance of the semiconductor industry, as these will be pivotal in shaping INTC's trajectory.